Hi, today we will be doing a different type of discussion. Let's call it a fast talk version where I give you a true or false statement, then I will straight away give the answer and discuss it further. Let's start. The main objective of a not-for-profit business is not to make a profit. The answer is false. It's not its main objective. Although it's called not-for-profit business, of course, to do its mission, it has to make profit. So it's not its main objective to not make profit. Next question. An example of a business stakeholder is the government. The answer is true. The government is concerned with the correctness of our FS because uh, they are interested in taxes that we are going to remit to the government. Next question. A corporation is a business that is legally separate and distinct from its owner. The answer is true. A corporation is also a business entity. So we have different forms of business: business ownership, single proprietorship, a partnership, and a corporation. And there's this derivative of a corporation, which is the cooperative. So it's true. Primary users of accounting information are accountants. True or false? It's false. Accountants are preparers and not users. So we accountants assist. So we prepare this information, assist, and we help to the users to understand these accounting informations. So we are not users, we are preparers of this accounting information. Next question. Accounting is thought to be the language of business because business information is communicated to stakeholders. It's true. Accounting is the language of business. Next question. The role of accounting is to provide many different users with financial information to make economic decisions. It's true. So we are providing for different users of this information. Proprietorship are owned by one owner and provide only services to their customer. The answer is false. Although proprietorship are owned by one owner, so statement is correct up to here, proprietorship, one owner, but it doesn't only provide services. It can also buy goods and sell at ease, or that is called merchandising, or buy raw materials and convert that raw materials into finished products, and that's manufacturing business. Next question. Large corporations such as SM, Coca-Cola, and Nike, or operate as manufacturing business. It's false. Although Coca-Cola manufactures, SM is a merchandising business. A business stakeholder is a person or entity that has an economic interest in the company. It's true. Our example in question 1, it's the government. It has economic interest in our company, of course, with our taxes. Senior executives cannot be criminally prosecuted for the wrongdoings they commit on behalf of the companies where they work. The answer is false. Of course, they can be criminally prosecuted. Next question. The primary role of accounting is to determine the amount of taxes a business will be required to pay to taxing entities. The answer is false. Although computing taxes is incidental, that is not the primary role of accounting, because accounting also serve not for profit organization where this organization doesn't have income taxes to be paid. Stakeholders use only accounting reports as the source of information to base all of their business decision. And the answer is false. Of course, there are other factors that are considered by businessmen when they do their business decisions. or when they make their business decisions. Accounting reports are designed with the information needs of the stakeholders in mind. Of course, that's why accounting is called an art. So we design or we present information based on the needs of these stakeholders. Managerial and accounting information is used by external and internal users equally. It's false. Managerial accounting is used by, financial accounting is used both by internal and external users, while managerial accounting is used mainly by internal users. Next question. Financial accounting provides information to all business stakeholders, while the main focus for managerial accounting is to provide information to the management. Oh, I just explained it. I explained it just now. Next. Proper ethical conduct implies that you only consider what's in your best interest. The answer is false. Of course, you have to consider the interest of everybody. So it should be everyone's interest. Individuals who wish to practice public accounting as CPA must meet the requirements of the state in which they reside. The answer is true. Of course, aside from passing the CPA board examinations, you have also to comply with the CPD requirements, as well as with, if you want to do tax practice, you have also to comply with the BIR requirements. Next, a business is an organization that provides goods or services to their customer in exchange for money or other items. That's the definition of business. So it's true. Profits are the difference between the amounts received from customers and the amounts paid to provide the goods or services. So amounts received from customers are sales, and the amounts paid to provide the goods or services are cost of sales. So sales less cost of sales is profit. The difference of these two. So this is true. The main objective for all businesses is to maximize profit. It's false. Although it's the objective of the business to maximize profit, it's not its main objective, as well as not all businesses aims to maximize profit. So again, there are not for-profit businesses or organization. Manufacturing and merchandising companies are similar because they purchase products from other companies to sell to their customers. It's false. Of course, manufacturing buys raw materials and processes it, forming goods, finished goods, before selling, while merchandising companies buy goods as is and sold it as is. Next, the cost concept is the basis for entering the exchange price into the accounting record. The cost concept, it's true. Without the cost concept, accounting reports would become unstable and unreliable. Of course, when the businessman feel that, okay, this is the worth of my assets, then we allow that to be entered into the accounting records. Of course, the records will become unreliable. So it's true. The unit of measurement concept requires that economic data be recorded in a common unit of measurement. It's true. Of course, say, if I have 10,000 pesos cash, and I have 1,000 US dollars, I cannot combine these two in my financial statements unless, of course, I translate first this 1,000 US dollars into pesos, so that the FS or the financial report I'm presenting is comprehensible, because all the data are denominated in a common unit of measurement, which is the Philippine peso. So it's true. Next question. If a building is appraised for 900,000, offered for sale at 950 and the buyer pays 850 cash for it, the buyer would record the building at 900,000. It's false because the cost concept says that we record transactions at exchange price. So the buyer, if the buyer pays 850,000, the company should record, or the buyer should record it at 850,000. The accounting equation can be expressed as assets minus liabilities equals stockholders equity. The original accounting equation is assets is equal to liabilities plus stockholders equity. The answer is true. Of course, assets minus liability is equal to stockholders equity. It's called the residual concept definition. The stockholders' right to the asset rank ahead of the creditor's rights to the asset. The statement is false. The stockholders' right to the stockholders' rights to the asset is not ahead, but its claim is after. That's why it's called owner's rights are residual claims. So it should be assets less creditors' claims first, or less liabilities before the stockholders' claims or the owner's claims. If the liabilities owed by the business total 500,000 and the equity is 500,000, then assets also total 500,000. Of course, the statement is false because it should be 1 million. Asset is equal to liabilities plus equity. So 500 plus 500,000, it should be 1 million. If total assets decrease by 40,000 and equity decreased by 45,000, the period's change in total liabilities was an 85,000 increase. Our answer here is false because it should be 5,000 increase. If the assets owned by a business total 500,000 and the stockholders' equity totals 400,000, total liabilities is 100,000. Again, assets 500, equity 400, liabilities 100. So, assets 500, liabilities plus equity is also 500. 400 equity plus 100 liability, it's equal. So it's true. An accounts receivable is a claim against a customer arising from a sale on account. That's the definition of accounts receivable. So accounts receivable is a claim against a customer arising from a sale on account. A balance sheet is a list of assets, liabilities, and stockholders' equity of a business for a period of time. The answer is false because a balance sheet is of up to here, the statement is correct. It's list of assets, liabilities, and equity, but it's not for a period of time, but rather on a specific date. So a balance sheet is an as of picture. So meaning any day, any time, you can prepare your balance sheet. As long as there are movements in your accounts, you can prepare a new set of balance sheets. Next, an income statement is a summary of the revenues and expenses of a business as of a specific date. The answer is false. Of course, income statement is correct up to here. Income statements shows revenues and expenses, but not as of a specific date, but rather a period of time. So that means a certain period of time. Say one accounting cycle must be must have lapsed first before you can prepare an income statement, because you cannot prepare an income statement at the moment you purchase your inventory. You have to wait first that this inventory is converted into sales before you can prepare an income statement. Unlike a balance sheet, after you bought your inventory, you can prepare a balance sheet. So a balance sheet can be prepared at a specific date, while an income statement should be prepared for a period of time. So thank you very much. That's our first edition of our Fast Talk. So this is recommended for those who have already reviewed the first part, the introduction. So this is a quick review of what have you learned in your ABM, in your accounting, one in your fundamentals. So see you for more Fast Talk version of our succeeding videos. Thank you very much.